What are some of the challenges that you all are seeing in the insurance industry as it relates to cannabis?
Yeah, so one of the major problems is on the property side with the capacity. A lot of the markets just in the past hadn't really had the capacity to handle the larger operations. So we now have capacity up to 10 million is usually not an issue. We can build towers and layers on top of that. But in the past, I mean, a lot of the programs had limited capacity for property. And that's where a lot of these businesses were getting their coverage. And, if they added a second location or if they expanded their operation or their building, they were being forced to basically self-insure. So now we do have options that we can provide additional capacity for the building, a new location, increases to stock or, goods in process, things like that. So we do have some additional capacity now.
One of the challenges I seem to face regularly on top of, the property capacity issues that Lee and I deal with on a daily basis is actually getting the insureds to buy in on the coverage that, an average risk manager would think that they should have. We had this roadmap for contractors, other lines of business where it's easy to sell the excess, the cyber, other lines that really should be, a no-brainer. Are a hard sell. So part of what we do is try and educate our agents and talk about the coverage. So it's not as much of a challenge to get them to understand the importance of things like EPLI and bud tenders, professional, that sometimes aren't offered on the other packages and things that we always like to wrap into an account.
Can you think of a recent example where you saw a coverage gap on a risk that came through?
Absolutely. The one was rather frightening not too long ago. The medical facility in the Northeast, and we're doing a policy review before submitting to markets and doing my due diligence and reading through the general liability form. They had an overt total exclusion for vaporizer products, accessories, and losses stemming from vaping. The Cash Center sold vaporizer products and had a total exclusion, which was a big issue that the other agent hadn't picked up. To be honest, my retailer hadn't picked it up either. So it was an opportunity for us to discuss the coverage. We also knew that because this is a medical dispensary, they were selling high strength edibles. This is common for cancer patients and such. They had an exclusion for a certain milligram of product that these guys were selling on a daily basis, and nobody had really read the form or asked the right questions. So we were able to take that policy, get them better coverage for slight rate reduction, plug that gap, and solve it pretty quickly for them.
Here in Michigan, recently I had an account where it was a large vertically integrated facility, over 30 million in annual revenues. And you look at their policy and there's an exclusion for product liability on it. And you look and see if they have a standalone, product liability policy elsewhere. And you come to find out that all they have is what the state is actually requiring them to have for a licensing requirement, which is $100,000 in Michigan in product liability coverage. So, for a $30 million operation to only have $100,000 in product liability coverage, obviously is a major issue. So just making them aware of the fact that, the high capacity or the high limits are available, for product liability. That's a gap we see pretty often as well.
And what's great is we have markets, especially in Lee's territory, that have a regional approach and can offer some of the forms and coverages that are different in particular regions. I know the attestation form in Michigan's a big one, Lee.
Yeah, the attestation forms here in Michigan. I think a lot of the retail agents and the insureds look at that a little bit differently than how I look at it. I almost look at it as just a requirement that they need to satisfy to get their license. I personally don't look at it as any sort of comprehensive coverage that would protect their business. I look at that as really just, it's a requirement they have to check off to get their license. And then there's another policy that is totally separate from that, that is really going to provide the protection that that business needs. And that would be, through a traditional GL product liability policy that we can place. And we can get up to primary limits up to $10 million in some cases. And we can build excess on top of that for the larger operations.
How does the regulatory environment and the legalization of cannabis impact the commercial insurance world?
It impacts it greatly. It dictates so much of what we do in the space, and it's honestly different in state to state, whether it's a rec state or medical. Even in particular states like Massachusetts, where it's home for me, we have different regs for the medical side and very different ones for recreational. And on the recreational side, you're required to have a particular bond that you have to buy that's unique to Massachusetts. It's a particular coverage. It has to be done in a certain way so that the state will accept it. And it's very narrow and specific. It's not very expensive and something we can help place. But we notice that a lot of folks don't recognize that they need these nuanced coverages in different states. And that's part of our value proposition, is making sure that we're abreast of what's happening in all the states, whether they're green, going to become green, or we feel it's the Idaho of the world and they might be the last to go, but we're still going to be keeping an eye on the legislation and make sure that we're ahead of it. And I know, speaking of Lee's home territory, they have their own set of regulations that he wades through on a daily basis. And Lee, can you tell us a little bit more about that?
Yeah, Michigan has some unique requirements for licensing. So in Michigan, the state, or the MRA, requires each licensee to have $100,000 in product liability coverage for marijuana and adulterated marijuana products. And that policy is not supposed to have any exclusions in it. So it's kind of a unique requirement. We have carriers that we work with that provide the coverage that the state is requiring, and it meets the wording exactly. There's other carriers that provide, a traditional product liability policy, and the wording may not meet exactly what the state is requesting. So there is some gray area in Michigan where it comes to the wording on the policy, but we do work with a carrier that does meet the requirement exactly as the state intends for it to be met.
More specifically, how do you think the federal legalization of cannabis will impact what you all do on a day-to-day basis?
It's hard to say. My concern with federal legalization is that it will become a Class 2 controlled substance, at which point it's going to be big pharma, and that's going to change the whole dynamic of the operators, the players in the space. It's going to really change how guys like Lee and I have to approach accounts, because we're not going to be working with the mom and pops and the small operations. It's going to be, I hate to say it, but the CVSs and the big shops. There will still always be boutique operators, as there are now, compared to the big MSOs we insure. But it's something that I don't want to say concerns me, but I want to see federal legalization. I want to see safe banking. I want these guys to have access to capital markets, credit card payment systems. But I also know on the other side of that comes what a Schedule II controlled substance looks like in the United States and the regulatory environment that goes with it. And honestly, I think that will take a lot of our insureds, and with one swipe of the pen, put them out of business, which we'll have to react to and shift our model. We're certainly ready to do that.
We received a global COVID-19 curveball in 2020. What are some of the unforeseen changes that occurred as a result of COVID-19 in the cannabis industry?
One of the things that was really interesting to see during COVID was that each state considered dispensaries to be essential businesses. And as the cannabis industry becomes more socially acceptable, we feel that obviously the industry is going to continue to grow, and that's a big piece of it is the social acceptance. And by them saying that dispensaries are essential is really pushing that forward.
One of the major changes that we immediately felt early on with COVID was some impact on coverage and restrictions on theft and business income. Moratoriums were put into place immediately with numerous carriers. They couldn't do it on renewal, but on anything new, they said we'll not offer BI. Quotes that were issued were no longer good. Renewals, we couldn't increase the BI, which is a big issue in the marijuana and cannabis space because they're growing so fast. We're seeing accounts double in sales from 10 to 20 million in 1 year. So we found that was a major concern and hurdle. And honestly, there wasn't much we could do about it because it was common across all the programs. The limited distribution package programs were also limiting it. Our brokerage markets were limiting it to $250,000 to $500,000 maximum. We've seen that loosen up some, but still some carriers are holding us to that, and that's been a challenge. Theft was another challenge where, as riots were starting to crop up and civil commotion, moratoriums were put in across the board, countrywide with some carriers. Others then backed off and said in certain areas we'll allow it. And now we're at a place where generally we can have a discussion about a crime score and talk about the risk and get the coverage, but it's going to be a challenge going into 2021, and I don't see that leaving.
Jencap is such a powerful platform for our retail agents and brokers, and our specialization in cannabis is, of course, a huge piece of that. What are some of the specific things that your group can help our retail agents with for their cannabis risks?
Despite what I see often, cannabis is not a generalist game whatsoever. And that's our value proposition. People like Lee and I and our other folks on our team are in cannabis all day, every day. That's our value proposition. It's what we do. We don't pull just the package policy off the shelf like we see a lot of generalists do. We do work with package policies, but we round those out and they have a particular place and fit. Not a one-size-fit-all approach. Everything needs to be looked at in a very holistic way. There's no two risks are the same, and every insured is different. And we really need to kind of kick those tires and get in the weeds and understand what their needs are, what their pain points are, and where we can add value. And sometimes that value that we perceive is not what they need or want. And we like to lay down a lot of options, work with qualified agents who know what they're talking about or are willing to learn, and that we can help educate to make sure that we are making the right calls for our clients and that we can stand by the deals that we make. For our reputation and the quality of our work product is incredibly important to us, and we stand by it.
Yeah, and you can have, all the expertise in the world, but it all really comes down to market access too. Without the market access, you just can't get things done. And at Jencap, we have the market access. We have over 50 carriers that write in the cannabis space. We can handle all lines of business. We can handle anything from a small startup operation all the way up to a large multi-state operator. So we really have a full service office that can handle any type of account and really can provide a customized solution for your clients.
I mean, at Jencap, we're truly better together. The cannabis vertical is a great testament to that. As we share resources with our teams in different states, we truly get the best approach. When I have an account that's multi-state operator, I have risk in California, I'm calling my California office to get some local intel on the account. We're gonna come together, and if there's something that I need to know about that locale, he or she's gonna let me know, and I'm gonna be able to approach the underwriter with the knowledge that makes me that much more in tune to the risk, being that I have my national approach, my regional approach, all sewed up in one package.
Yeah, there's no doubt that the application process is very burdensome, and there's a lot of information that's requested to properly underwrite these accounts. And I understand that that's a huge problem. Just getting the information a lot of times from your clients, is an issue. So it's one of the other benefits of working with Jencap. We understand that information is tough to get. So we will work with you, and we'll be able to explain to you why we need that information. If we're asking for photos of the interior of a building, we're going to tell you why we need that information so that you can relay that to your insured. Because really, ultimately, what we're trying to do is get the carrier to feel very comfortable with the risk and to provide, or for them to be able to provide the best possible terms. And they're only going to be able to do that if they're comfortable with the actual risk.